Good evening, everyone. We are here for the Q3 update for the Mahindra Lifespaces. We are presenting the investor presentation for the quarter ended December 25 for financial year 25-26. Now I will hand over to our CFO and our CEO, Mr. Amit Sinha, to take out through the Q3 journey of Mahindra Lifespace.
Yeah. So this is Amit, I think, and then I'll request Sriram. So, as you know, last quarter, Sriram was still coming on board to the full CFO role. So this is the first quarter where he's taken over the full CFO. So he'll be jumping on separately. Meanwhile, I will take you through the short presentation. So can you just go to the next slide? Just a second. Hopefully you can see the screen. Can you go to the next slide? We press OK on that. Next slide. I won't spend too much time on this. The strategy part, we don't have many changes to it, but the only point to note is our GDV addition is at roughly 47,000 crore, which is being executed. Rest of the elements of our strategy stays consistent with the past discussions. Let me share a quick update on our overall business. First and foremost, I think on the residential side, we have reported a pre-sale of 572 crores. We are at roughly 1,800 crore in the 9-month period. We've had some very successful launches this year so far. New Haven in Bangalore, Marina 64 in Mumbai, Citadel in Pune, and Lakewoods in Chennai. They have been successful launches. Sustenance sales have contributed significant part of our sales so far. Vista in Kandivali, Ivy Lush in Pune, Vagoli, Citadel in Pune, and Green Estates in Chennai. They have given us a significant part of our pre-sales this year. We also had a very successful launch of Mahindra Blossom in Hope Farm, Bengaluru. I'll share the details and highlights later in the presentation. It's not yet counted. It's not counted in Q3 because the launch, netting, etc., only happened last weekend. But it's been very successful for us. And Q4 launches, I think we've gotten Mahalakshmi and Bhanduk to the finish line. I think the last bit of approvals from the RERA side, etc., are being filed as we speak. We will hopefully get the RERA in the next few days. I'm not sure how much of the pre-sale we'll recognize in this quarter, but it will set us up really well for the next quarter. On the execution side, there is a lot of momentum. BD continues to be strong. This has been a concerted effort for us over the last couple of years. The GDV addition for this year so far is 10,600 crores, which is solid. We have very strong progress on EC for most of the projects. As you know, in the last 6 months or 5 months, ECs have become a requirement before we can get RERA. So that's why some of the RERA launches are delayed, but it's a one-time correction. Future will automatically get adjusted to the new requirements. We all also achieved quite a number of OCs. Overall, 6 OCs we have received in the last 45 days. Some are captured in our 31st December quarter end, and there are 2 or 3. 3 are captured before 31st December and 3 are after. But most of the valuable ones are captured in December quarter. And given our discussion about de-risking execution, we've also continued to invest in partnering with tier 1, 1.5 vendors, especially for core and shell and bigger part of the project. Significant investment on the employee side, culture side, training side, and culture creation side. On the IC and IC side, we see strong leasing activity in Jaipur and Chennai. These are the places where we have good amount of land that is coming for availability. The realization has been quite good, better than what we expected at the start of the year. That shows the robustness in the demand in the economy, in the industrial demand. We received the Origins 2A. If you recall, almost a year back, we had shared the details of our extension of our partnership with Sumitomo. That has now been approved, which allows us to bring to market almost 125 plus acres of land for leasing. We are also trying to bring other locations to market, such as Ahmedabad. I think we are hopefully will start sharing some updates as we get all the clearances, all the approvals, and the leasing activity picks up in that area. Overall financials, 9-month consolidated residential and IC sales combined is at 2,125 crores. Strong PAT delivery of 208 crores so far. I think for this quarter it was 109 crores, right? So very healthy quarter supported by some of the successful OCs and also a strong IC performance. Collections have been strong for the Resi, 1,472 crores. And ever since we did our rights issue earlier in the year, our balance sheet continues to be quite healthy, quite conservative from a net debt to equity ratio of minus 0.12. So we have more cash available. And cost of debt is at a very, I would say, competitive level at 6.7%. Obviously, it includes CPs as well as other ICDs, etc., that we have. So it's a low amount of debt, and whatever debt we have is at a very competitive rate. If we can move forward, I think you've seen a variant of this slide. This is everything that we have done this year. I think the latest one is the extreme right column, which is a new society redevelopment, clustered redevelopment. It's roughly 1,000 crore. The name of the society, Lokmanya Tilak Nagar. Very premium location, very well connected to the Eastern Highway, and I would say near Shivaji Park, great location. And we are very excited to have won this mandate to pursue this society. Go forward. This captures the year to date as well as inception to date in terms of the GDV. As you can see, current inventory as of 31st December, Blossom is included there as inventory. Roughly 1,800 crore would be included in that from Blossom. We have Vista, Ivy Lush, Citadel, New Haven, Green Estate, Nestalia, Tathaude are small, but the first four are quite big. In fact, the biggest is Blossom, and that gets consumed significantly in this quarter. The part B is future phases of current projects. Citadel Phase 3, which is quite large. Citadel Commercial, another big one. Marina 64 is the plot A part, which is expecting the RERA anytime. Lakewoods and others together. So that's 2,600 crore. And then pipeline projects, which are yet to be launched, are captured long list all the way from Santa Cruz West, which is Vestera, all the way to Matunga, which is the recent win that we have. And then some of the other strategic projects, which are Jaipur and Murud, that have significant potential, but yet we have not given them full value because we need to first get them moving and then we'll extract full value through design and execution. So overall, 47,000, 46,770, 46,000, 47,000 crores of GDV, which is with us today, and we only hope that it goes forward aggressively. Okay. This chart you have seen before in terms of how we are planning. I think this looks good if I tell you that Mahindra Blossom in the last weekend itself, one weekend when we did all the netting, etc., did more than 1,000 crores of selling. We have not captured that number because that will be in Q4. But if you add that 1,000 plus crore just from one weekend and then add other sustenance sales and the remaining 2 months of sales for even Blossom, I think we are looking at a healthy growth in our sales numbers. The good news is that if the moment we get approvals, we generally have a very strong sales performance. So given the point I mentioned earlier about EC, if we didn't have the delay, we would have seen many more RERA launches with significant time for us to prime the market and convert into sales. So Blossom has happened. Marina 64 is happening right as we speak. Hopefully RERA anytime. And then Beacon Hill and Bhanduk, they will happen hopefully later part of this quarter. But the impact might be coming in the Q1 of our next financial year. Yeah. Go ahead. Our march towards 10K vision stays healthy. You've seen the GDV 47,000 crore, but this phase lays out how we are thinking about our projects and how they fit into our 10,000 crore journey. 9,500 coming from Resi, 500 coming from IC business, and we have a few holes to fill. I think slowly we are filling all those holes as well. And our goal is not to wait for these years to convert them into sales like Matunga and Chembur in AV2. A lot of effort are already underway to move them by at least a year. So hoping that we achieve our aspirations sooner than later. Go ahead. IC business continues to be very healthy. We are quite pleasantly surprised with the buoyancy in the business. It's just an example. OC2A took almost a year for us to get all the approval and everything. But looking at the demand, I think we have sold almost 50%, or we have already done LOI for almost 50% of that in the 30 days. And obviously they were in the pipeline for a long time, but there is a lot of demand for strategic industrial clusters, and we have the inventory at the right place, and there is a lot of preference for our kind of industrial park than the competition. So we see tremendous growth in that. We expect that business to continue to grow at a healthy rate, even in quarter 4, given the pipeline that we have. right? So it's a good traction we are getting in our industrial business. And I'll share more update after the quarter four, so we'll have full visibility of how the performance is going to be for this financial year. Go ahead. On this page, it shows that many of our peers in this industry have plotted, which gives them short-term profitability, given the accounting rules that benefit plotted. For us, IC business is the plotted. It's industrial plot, not residential plots. So slightly different, but it shows you how much gross area and net leasable area we have, which can be monetized, similar to the plotted that some of our peers have in the residential side. It's not that we don't have plotted on the resi side. We're building that business, but industrial plot business gives us tremendous, strong starting point as we look at the overall residential plus industrial business, rather than industrial alone and residential alone. So good amount of opportunity to be monetized from our IC business. Good. Yeah. Let me pause here and then request Sriram to jump in on the financial side.
Thanks, Amit. So on the financial side, at an overall level, we had Q3 residential sales of 572 crore against 334 crore in the prior year. And for the 9 months ended, we had 1773 crore against 1749, which reflects a 2% growth. But as Blossom and the other sales are expected to lock in Jan, this number is expected to surpass the prior year numbers of 2804 crores. On the IC and IC side, the performance continues to be really robust. During the 9 months period, we've grown close to 30%, and the pipeline looks very strong. We had just unlocked OC2A in December 25, and we are already seeing good traction for IC leasing in our Origins Chennai location. So looking ahead for a good Q4 from the IC side. On the GDV side, we had done 10,560 crores. This is on the back of 18,100 we did last year. So the GDV momentum continues to be very robust, and the additions that we have made so far in this year, are a good mix of redevelopment, outright transactions across Mumbai, Pune, and Bangalore, which are our core markets. The residential collections were at 1472 crores, again, an 8% growth over prior year. That said, the OCs that we received in December, we actually got it towards the fag end. We will expect to catch up on the residential collections in Q4 of this year. The balance sheet continues to be healthy with negative net debt to equity ratio of 0.12, and the cost of debt for us is currently at 6.7% versus 8.9% a year before. So this is the segment results which we had started publishing a few quarters back. As you can see, with the OCs coming in the December quarter, for the entire 9-month period, we have a residential PAT of about 43 crores. The Q3 residential PAT was almost 64 crores, which is a reflection of the OCs that we received, which is primarily Eden Phase 1, Nostalgia Phase 1, and our project in Chennai, Happiness, those got the OCs, and the profitability reflects a decent portion of how profitable these projects are. And effectively, the IC and IC business continues to be very robust. You can see there has been an increase in the acreage leased from 47 to 53 crores, but more importantly, the realization has also been high. and the EBITDA margins and the PAT margins from the IC business continues to trend up with solid leasing activity across Jaipur and Chennai. Moving on. On the cash flow side, for the 9 months ended, we did operating cash flows of roughly 558 crores. There was investing and financing cash flow as well of 250 crores. So overall, we ended with 724 crores of closing balance, which includes our balances under RERA accounts. On the land outflows, you would see it's 802 crores compared to 715 last year during the same time, and it includes the transactions that we had done for the 9 months ending December 25. This is one slide we added, based on the discussions we've had with you in the past. So we brought it back again to show the cash flow potential from our existing GDV, existing projects. It says it's about 13,065 crores. The big disclaimer is it does not include Thane, Pink, and Murud as yet. If we include that, we could add another, roughly 3,000-ish crores.
Pink is Jaipur.
Pink is Jaipur, yeah. Sorry. Jaipur residential.
I think for the next meeting, we'll add Thane as we are at advanced stage of design and the whole planning phase. So we'll include that.
Absolutely. Next page. So on the P&L side, for the quarter ended, we did about 109 crores of PAT. And for the comparing this against the last quarter, which was about 48 crores. And Q3 of last year was negative 23 crores. So overall, for the 9-month ended, we did 208 crores against negative 24 crores for the same 9-month period last year. Moving on to the balance sheet, as we did the rights issue in Q1 of this year, the net worth reflects the equity portion of the rights issue. The use of proceeds of the rights issue was to pay down the long-term debt, which we had done. About 918 crores has been completely paid out. And on the inventory side, you would see that the inventory has gone up from 4,400 to almost 5,600 crores. This reflects the new projects that we have added. We also had Luminaire, which actually became 100% subsidiary this year. So that also got added to our inventory in this quarter. So overall, looking healthy with our balance sheet position. Yeah, I think with that we will sort of open it up for questions and take any inputs.
From the group.
Ask questions. I have to take questions. Okay, I think we'll take Parikshit's question first. So he was asking about the response for Blossom, which I think we addressed. He was asking on GDV launches and sold, the amount we sold for Blossom. And on the PD, he had said we had already done 10,600 crores for the 9 months ended. Where are we likely to end up in FY26? And when is Marina 64 getting launched? That's the other major question.
Yeah. So let's start with the bottom, Marina 64. Anytime now, Parikshit, I think it's been through the RERA approval process for a few days now. There were some questions that came up. We have addressed them, most of them. So we are expecting any time. So should be maybe, let's say, a week to 10 days is what I'm hoping. So Marina 64, but plot B and C is in healthy shape. We've captured that sales already in our pre-sales number. That's one. Second is GDV. I think we don't, as we have spoken in the past, we don't have a GDV target per se. I think we want it to be healthy so that our 10,000 crore journey is viable is likely to happen in a predictable manner. And I think we have gotten quite close to that from our portfolio. Now, how can we get the right GDV that gives us right mix of geographic spread, right mix of great locations where projects are quite successful? Fortunately, we have got a large number of deals coming our way, given some of the traction we have gotten with playing in the market in the right way. When we don't like the deal, we say no immediately. When we like the deal, we take it to the logical conclusion, and we move fast through it. So I think many players in the industry, landowners, partners prefer that clarity of thought. So we have good deals to choose from. We are given the portfolio that we have, the pipeline we have, we will always choose deals that will be good deals for us at a great location. So that's the fundamental principle I've set for the team, and we have good number of deals. So hopefully, some good deals will close that are in the pipeline, evaluating, but hopefully at good terms. So that's part one. And part two, and the same question is, I think we also see a little bit of correction, moderation happening, especially on the luxury side. We see a lot happening in the NCR region where we are not playing right now from a sales perspective. So we also have a view that as market slows down a little bit, our strategy is going to work out really well. We have a great customer pull because of our brand. We are not trying to play in segment that is likely to see significant slowdown. Like affordable, you've seen in the last few years. Luxury might be slowing. Mid-premium, premium segment, that will continue to have good demand. And as long as we keep the ticket price, I would say optimal, I will not use the word affordable, optimal, will continue to have takers for our kind of brand from the organic demand that exists with end users. And we always prioritize end users over channel partners. We want customers who are going to live there to buy our homes. And I think hopefully that allows us to continue to gain momentum. And in that context, Mahindra Blossom is a shining example. We didn't have to do a lot. We started marketing only after we got RERA. In one weekend, we did more than 1,000 crore. Total GDV is 1,800 crore. And I think we continue to maintain the momentum at Mahindra Blossom. And our goal is not to do a sellout. I think right now we've gotten good traction, good velocity. Our goal was to sell 50 to 60%, and we have got into that level already. And we'll see, how the market shapes up, as the construction, we already have EC, so we'll start the construction immediately. And hopefully we'll have more appreciation for our customers and a fast execution to OC, even for Blossom. So that's a quick answer to all the questions that Parikshit asked, right? Hopefully, right?
One more question, Amit. Generally, you've been asked by everybody that status on Bhandup, if we can highlight about the approval status and how we are looking at launch, and also with Lokhandwala.
Yeah, so on Bhandup, I think positive news. I think concessions that happened, IOD has happened now. We have received EC also last week or 10 days back. So now we filed for CC, right? And then RERA. So I think it's a question of CC takes, I think, anywhere from 2 weeks to 20 days, and same time for RERA if everything is aligned. So we are looking at maybe a month, maybe March 10th is the time frame we have, which could be that, when we get all the approvals on Bhandup for RERA, for us to launch, including RERA. So that's Bhandup. And then Lokhandwala, I think Lokhandwala is at the design and stage of alignment with the societies. I think it will take some time because it's a marquee location, marquee project for us. We want to invest enough time to make sure that the designs, the planning, the approval process, etc., is in the right shape. So maybe in the next meeting when we have, I'll give more concrete details of Lokhandwala as a specific project. But I think typically it takes anywhere from 18 months to 2 years for us to launch society redevelopment project. Sometime even longer, as we have seen.
There are some questions on market. I'll bunch them up. Basically, if we can outline on how we see the market. Again, if we can also outline the demand we see by cities in our core markets. How do we see the demand going there, and any sort of sluggishness that we are seeing?
Yeah, so I'll give I'll make 4-5 points there. The first and foremost is we look at overall inventory overhang, right? Inventory overhang has gone up from roughly 13 months to now 15 months. So there is slight slowdown that we have seen compared to last year. But a real slowdown in the industry when this number crosses 30 or 36, right? You have 2.5-3 years of inventory sitting, and then the market pickup is low. Right now we are just over 1 year, which is still quite healthy. You could so that's point one. So it's slightly inventory overhang is higher. Second is we see slowdown. Obviously, we talked about affordable, but lately we have started to see slowdown wherever the luxury projects are happening. And I'll give the example of Gurgaon, for example. There are very few projects which are like where you can buy a 2-bedroom, 3-bedroom for 2 crores to 3 crores, right? Most of the homes are 7, 8, 9, 10 crores plus. And we see slowdown that's happening in that segment. It will take some time for us to see the correction, but it's important for us to note that the number of buyers for that size, that ticket size, is not as high as there is for mid-market and premium products. So when we look at the market, we not only look at the units, but also look at square foot. We also look at the pricing. You get a true sense of what's happening. So the units actually have come down, but that's not a really bad thing because in Mumbai, for example, the approvals have delayed the number of units. In case of most of in the past, the square foot actually went up because many of the places were launching larger side homes. Obviously, Bangalore, Pune, even Delhi, Gurgaon to a greater extent, and that's why it has a very big impact on the ticket size. And we believe that if you get the ticket size wrong, you'll see a sudden change to your velocity because people respond to the price elasticity is not there beyond a point, right? So overall, we see a slight slowdown is happening. Now, in our context, because we have tried to be very careful about the segmentation that we play, we're not playing in the luxury segment, right? So we don't see those kind of headwinds. But we have been affected by the slight slowdown on the approval side, right? And as we just talked about Bhando, Mahalakshmi, Navy, they are all slightly slower than we would have liked it to be. It should have been a quarter or at least a couple of months faster. It would have given a full year impact. But it's a one-time correction that's happening because of the new regulations where EC is a requirement for CC, which leads into RERA, but it will get corrected in future cycles. So I think we have been very focused on our strategy, mid-premium to premium, great locations, keep the ticket size, which is affordable for a big part of that segment, and make sure that you're able to get great locations because at the end, real estate, if you find a well-connected, great location, you're able to find buyers for it. You're not betting on future infrastructure, you're betting on current infrastructure. So my takeaway from what I just said on the market is, I think we see some slowdown and more in some of the specific segments or specific markets, but we are treading the path very carefully so that we are able to manage our financial goals, our growth goals in a balanced way. Blossom, for example, is a project where we not only got the velocity, but we also got the pricing. And some of our peers are the largest players in Bangalore. We are able to get a premium even on them. So I think a good project, good segmentation helps you manage through the slowdown because of the overall buoyancy that we see towards corporate brands like us.
Thanks, sir. I think one question on IC.
Yeah.
What is the value of potential of the 15-20 net leasable acres we'd announced? And what's the period for unlocking the potential and the margins that we are seeing on the ground? It seems to be.
What was the first question again?
Value potential of the 15-20 acres, our IC business.
1,500.
1,500 acres.
Okay, 1,500. Yeah.
We had put out 5,000 to 6,000.
Yeah. I think So that slide was. It's on an average we've used 3 crores, right? 3.5, right?
3.5 crores.
You want to answer that?
Yeah, so I'll take it. So overall value that we are seeing is about 5,000 to 6,000 crores of sales for the IC business, which covers this 1,520 acres. The PAT potential from this is roughly about 1,500 crores over a period of time. We expect. I think your question was also on the timeline for unlocking this potential. In our estimate, we think that this will take about roughly 10 years or so. If you see the 1,500 acres, roughly half of it is in Jaipur, and we also have locations like Pune, Ahmedabad, and Origins Chennai. Origins Chennai phase 2B, is yet to be sort of brought to the market, but we are also working on Origins Pune and Ahmedabad as well, to sort of bring that into the market. So overall, that's the timeline we are sort of working towards. It could be quicker as well if the demand continues to see good traction. So yeah, that's the answer to this question. Amit, I think there are some questions on guidance for 27 and 28 if we can give. I think we stayed away from 28.
I think we first time we've given a guidance of 27 at 4,500 to 5,000 crore of pre-sales. I think I'll allow us to deliver this for us to give you the guidance for the next year, F28. I think, but our trajectory, we are in the upward trajectory, right? We may need to think about if markets slow down significantly, but at this time, we're holding our target for next financial guidance for the next financial year between 4,500 to 5,000 crore.
Then there is a question from Shaleen from Sears on the Resi profitability and which historically it has been impacted by the legacy projects. How do we see that tracking over time? So I'll take this.
Yeah.
On the Resi profitability, we saw this quarter. We had done about 63 crores of PAT, primarily driven by 3 critical OCs we received, which is Eden Phase 1, Towers A and B, Nostalgia Phase 1, Towers A and C, and we also had Phase 2 of Happiness Chennai, that also we received in December. So all of this has contributed to increase in gross margins from the residential side, which is trickling down into the profitability. So net we were at close to almost 10% of margins, which is a good starting point from the Resi perspective. But as we see more and more residential projects that come up for completion, so we have Eden Phase 2, we have a few of the other projects coming up in Nostalgia, Alcove, Luminaire. So all of those are expected to contribute to our continued PAT profitability delivery over time. So that's I think I would that's where I would kind of say that it's a good situation to be in with the resi profitability turning positive from the PAT side, after a long time, and we with the continued OC delivery, we expect to the endeavor is to maintain that as we go forward. But on the IC side, I would say that that's been a significant contributor and continues to play an important role from the overall company's profitability. With one question on value of FY26 launches and value of FY27 launches. I think on the FY26 launches,
already your plan.
Yeah, the launch.
Yeah.
GDV of the launches that we had.
So if you exclude Mahalakshmi and Bhandu, it'll be roughly how much? 3,000, right?
3,500.
3,500 crores, right?
Yeah.
Bhandup and Mahalakshmi will get launched this quarter, our estimate, but most of the sales impact would be in the next quarter. So the pre-sales of new launches that we have done this financial year will be roughly 3,500 crore, excluding Bhandup, excluding Mahalakshmi.
And going into FY27,
it'll be somewhere between, depending on our success with the launches, but our goal is to take it to somewhere between 5,000 to 7,000 crore, right? Because the Bhandup and Mahalakshmi itself would be quite large, depending on the phases, and then we'll have a couple of other launches to support that.
I think one question from Johan on the Sai Baba redevelopment update.
Yeah.
Any progress and update on when we are expecting launch on that?
I think the launch will be in Q2. Our target is Q2 of next financial year. The most of the groundwork has been done. Right now, the concessions are underway. So that's a big, if we can get the approval, it will trigger all the other activities with the society on PAAA and the prerequisite plan sanctions towards RERA, right? And the demolition that we'll have to do, right? So Q2 of next financial year is something that we are shooting for on Sai Baba. Concessions are underway.
One question related to the recent budget. Are we expected to see any benefit from the CPSC real estate monetization? And if so, in what manner? So this is related to the unlocking of the real estate assets of the public sector companies.
I think we'll wait. It just came out. I think we need to understand this better. I think before we can comment, any unlocking of real estate is good, but we also very much aware of the, for us, getting the price under control is extremely important. The ticket size under control, and then that means everything has to work seamlessly on the land prices, on cost of construction, labor costs, etc. So we'll wait to understand what land, what unlocking is planned and which cities, where they are, and what kind of commercials it'll mean for any buyer.
So thank you everyone for participating in our.
Do you have
any other questions?
If you have any other questions, please you can type it.
We'll do the next few first. Guys, there are no questions. This is generally it's a shorter. I hope you could hear us well. You could see the presentation. If you have any feedback, whether it's working or not, this is the second time we tried. Please let us know. One question came in. Okay, we'll do that. And in the meanwhile, next, which is the end of the year, we will plan to do it in person as we have done a couple of times this financial year, right? So we'll do that. So we get to learn from you, get your feedback, and make it more conversational in terms of our engagement. Sriram, you have a last question, right?
Just came in from Ronald from ICICI Securities. He's asking, elaborate on construction execution capability scale up as we have now more and more projects coming up.
Yeah, that's my biggest priority, Ronald. And I wish you were in our office. You could see we celebrated our project leadership team that helped us get actually those 6 OCs and a few more in the pipeline. You'll find that half of the team is new and half of the team is old. A key part of the OC that have come through is a lot of colleagues in the projects organization who started the project. They are there to get the OC. So they were there from excavation, Bhumi Pujan, to all the way to get to OC. And a new set of people have joined from other firms who are excited by the project outlook, the portfolio projects we have across all the 3 cities. They're looking for growth, and we are able to attract them because they are very keen to create a meaningful impact in our organization. So first part is getting the right people. And we've added a large number of people to prepare ourselves for significant number of project sites in addition to launches that will happen. The second part is a partnership with other contractors and vendors. I think if you work with tier 3, tier 2 kind of contractors everywhere, the bandwidth required within the organization is significantly large. And I think we are trying to move a big part of our portfolio to tier 1, tier 1.5 contractors who have experience, scale. We may have to pay a little bit more for their, but they come with their benefits, which we are trying to factor in our commercial planning. So that's the second part. And the third part is overall systems to ensure safety, ensure quality, ensure progress tracking, ensure work done, billing, productivity. I think we are putting small systems that are going to be very powerful. An example of that is how do we do snagging, de-snagging at the end of a project, right? When the OC has happened and we are doing the handover. You could make beautiful, strong apartment, but if the possession has even a chip tile or a crack can really make a customer worry about the quality altogether. So we have put a 3-step process. A large number of team is involved to ensure there is a system that has been put in place, which has projects, quality, and facility management teams involved. So we're making sure that all 3 elements. Number 1 element is the right people, right leadership team. Number 2 is right ecosystem with our contractors and vendors, and right set of processes and technology solutions that are there to support us. All 3 of them are important for us to do execution really well and really want to create a name for ourselves. When somebody walks into a Mahindra home, they should really be wowed. And that experience, we were too much into affordable in the past. That was getting limiting. But now we're playing in the right segment, and hopefully we'll continue to delight our customers. Is that okay? Great. Then thank you so much. And we remain clued into any and every feedback. If you have any comments, any suggestions, please let us know. We will be happy to address them. Thank you so much as always for being there for us.
Thank you. Thank you, everyone.
Thank you.